You're watching Beyond Market. Welcome. I'm Esther Awoniyi. Many thanks for joining us. On today's show, we'll find out how best to navigate the risk landscape this year. As always, you can join the conversation with the hashtag Beyond Market. You can also follow my Twitter handle. Send me your comments and your thoughts to @EstherOAwoniyi. Now, the global economy is still recovering from last year's trade tensions between the U.S. and China, with the World Bank projecting a modest pickup in global growth to 2.5% this year. Now, in a year where about 5 West African countries are scheduled to have presidential elections, what risks will be keeping governments and businesses in the region on their toes this year? Timothy Cox, partner at Control Risks, joins me for this discussion. Timothy, thank you for joining me. Pleasure to have you.
Thank you. Very good to be here.
Looks like 2020 is shaping up to, or it's going to be quite another interesting year, particularly for business. Obviously, business always has to keep, its eyes on all those events as they, as they shape the year going forward. But let's start from a global perspective now. For Control Risks, I'd like you to walk us through your top 5 risks for the business landscape. Then we'll walk our way back to Africa, particularly West Africa. And looking at your list, at number 5 is leaders without strategies. Just briefly walk us through that.
Sure. So thank you. And so every year Control Risks publishes our annual risk map report, which, as you say, details what we consider to be the most pertinent risks to businesses globally. And at number 5, we have identified a shift in thinking by the world's major powers in terms of how they interact globally. And so what that has resulted in is, for the likes of the U.S., Russia, China, pertinent in Africa, Turkey as well, has been a shift away from longer-term strategic visions and plans to capitalizing upon shorter-term tactical gains. So a lot of the decision-making that we've seen by these major powers has been focused around quick wins rather than a long-term strategic objective.
So as a business, how do I digest that? How do I navigate that? What does that mean for my business?
Well, it means a couple of things, because firstly, as with everything relating to government activity, there's a limited impact that one can have upon influencing those decisions. And so businesses very much have to be in receive mode. They have to be looking to the horizon, to be trying to understand what the implications of those shifts in strategies, whereas perhaps if we were talking 10, 15, 20 years ago, China's strategy was very, very clear in Africa. It has increasingly shifted to one of shorter term objectives, investment in infrastructure projects with a quick option of repayment terms. That changes the very landscape in which all businesses operate in. So an awareness of that, and also an awareness of the upside. So as new strategies or as new tactical behaviour influences the market, new markets open up and become available for investment in a way in which they weren't previously.
Okay, let's move quickly to number 4. Economic anxiety meets political fragility. Obviously pointing to the pace of global growth that we should expect this year. We've heard from the World Bank, the IMF, still slow, numbers are not great, but I suppose businesses, coming from last year, and the fact that many of those risks from 2019 are sort of being carried over into 2020, I suppose it's not a big surprise for businesses. But does that make them better prepared this time?
Well, I think it's not a big surprise for businesses. The challenge, of course, is when we combine slow projected global growth, and you mentioned it in the introduction, you combine that with political fragility. And so when you look at, obviously the US elections are coming up, the EU sits at a critical juncture in relation to the Brexit discussions, China and Russia both have domestic challenges and international challenges of their own. When we combine this with the fact that the projected GDP growth rates across the world are as low as they've been since 2008, depending upon which metrics you use, we're in a situation where actually quite quickly the prospect of recessions or of declining growth rates impact upon economies, and they lead to political unrest and upheaval. Interestingly, and we can talk about this in a bit when we come to the West Africa section, but this actually poses a real opportunity for Africa and African economies at large, because of course the growth rates projected are far higher in Africa. And so in the way in which many of the economies are counter-cyclical and they stand to benefit from these weaker growth rates elsewhere in the world, there's a real opportunity to capitalise upon that.
Let's move quickly. Number 3, cyber warfare. You're projecting that will hit a new level. 2019, we did have some very scary moments, scary episodes, and to just think that in 2020, this could actually to go a step higher. How nervous will that make businesses?
I think it makes businesses very nervous, and I think they're right to be nervous. It is, when you look at senior decision makers within businesses, this is typically in all of their top fives. Even the least technologically dependent businesses have an exposure, have a vulnerability. We are seeing increasingly sophisticated attacks by threat actors, be they state-sponsored, be they independent, be they criminal or activist, and this is something that's only going to get worse and worse. And as we see these increased levels of global connectivity and we see the increased requirement on businesses to hold large quantities of data, so their vulnerability is increased.
And should we expect more investments into mitigating this risk for businesses themselves, investing more into, of course, protecting themselves, as it were?
We absolutely should see that. And I think what we've increasingly seen as well is that executives and senior decision makers within businesses are held fairly ruthlessly to account by public opinion in the aftermath of big cyber attacks. We quite often describe these sort of crises as a sudden and brutal audit. And the aftermath of a cyber attack upon a business can be completely debilitating. And can have a serious impact. So I think it's at the forefront of most executives' minds, and rightly so.
But the activist society passes judgment. Here you say being ethical and compliant is no longer enough. Businesses have to go above and beyond now.
Absolutely, yes. And I think this is one of the more interesting developments over the last few years in terms of the way in which businesses are expected to interact with society and engage with their stakeholders. And it is no longer enough to pay lip service to a policy or a standard that adheres to the major global issues that civil society is discussing around the world. Shareholders are demanding greater scrutiny. Stakeholders within business are demanding greater visibility on the way in which businesses addresses these core issues. And fundamentally, this is something that the businesses are going to have to deal with, either in a proactive and positive fashion, or deal with a very negative reaction from when it goes wrong and we start to see protests or lobbying or embargoes of businesses and their activities.
Would you say that these businesses understand that it's now, more than ever, it's in their best interest to go in this direction, being more, going beyond being just ethical and compliant, sustainability issues, you and I discussed that earlier, and to not just to also be seen to be doing, not just to be seen, but actually doing it?
Absolutely, and smart businesses recognise that, firstly, in terms of their interaction with civil society, with government, with regulators, with their shareholders, they have to be seen to be going above and beyond. It's the right thing to do. It's also good for business. It enables them to attract a younger, more dynamic workforce who are interested in these issues and engaged in these issues globally. And also it reflects in terms of the way in which their business practices are upheld and scrutinised and reviewed. And with longer supply chains all around the world, it is no longer enough to ensure that this is in place for one's core business. It has to extend to one's supply chains, to second, third level subcontractors, to make sure that we don't see the types of exposés, the types of activist groups targeting businesses that are seen to be operating in an unethical or uncompliant fashion.
Very interesting. Let's move on to your number one top risks for businesses in 2020, geopolitics and the U.S. campaign trail. I suppose we're not all surprised to see that at number one. Of course, we're back at that, year again for the U.S. Talking about elections, but it's also coming at a time where we're seeing heightened geopolitical tensions. Iran, of course, there's still ISIS, and of course some other issues. And I'm just wondering, for you, arriving at this issue, walk us through how you see this playing out this year.
Well, it's election time again in the US, and as ever, there is tremendous international scrutiny and focus upon how this is going to play out. That's the case in an average election year. This election year is far from average. I can't recall an election in modern times that has been as polarizing and as divisive along ideological grounds as we have seen here. And this, as you note, is against the backdrop of some fairly radical changes in terms of the US's engagement with the likes of China, Iran, to a lesser extent Russia, but certainly also against the backdrop of a domestic impeachment process which is ongoing. So we see a highly polarized, highly partisan, highly ideologically divisive election process that will continue throughout this year. And ultimately, while key question marks will remain around the outcome and the composition of Congress, which has most of the influence in terms of tax and major regulatory reform, this will be a focal point for the rest of the world, and it will be a focal point for any any business that engages in the US or engages in US dollars or has supply chain links through to the US. So it remains the headline issue.
Yeah, but there are a number of issues that spawned out from this geopolitics and the U.S. campaign trail, where you tell investors to keep their eye on a number of things. One that caught my eye was with North Korea, Iran, and ISIS and Russia's cyber warriors. Will they exploit the election? Of course, that's what everybody's wondering. Come these elections, that what Russia was accused of at the last election, will that happen again? How is that? To what extent are businesses concerned about that? The U.S. has said that no, this time they understand and recognize that yes, Russia did have a hand in the last elections, and that of course is still a possibility. But to what extent does business believe that the U.S. is better prepared this time to perhaps identify it and also prevent it?
It's a very difficult question to answer because, as we alluded to earlier, the cyber threat landscape is evolving very, very quickly. And so governments, regulators, law enforcement agencies, wherever they are in the world, face a sort of a never-ending game of whack-a-mole and catch-up to try and get ahead of some of those nefarious elements that might want to benefit financially or benefit politically from interfering in all sorts of aspects of modern life, not just within the election cycle. I think the main point to refer back to there would be that the US has been forewarned in this regard. They've been forewarned that there is likely to be some form of malicious intent in terms of the election cycle, be that at a state level, be that from smaller activist groups, individuals who are trying to promote their own ideology or promote their own political perspective. So I wouldn't go as far as to say that the US is as prepared as they could be, but I would certainly say that they've been well forewarned that this is going to be an issue.
If you're just joining us, Timothy Cox, partner at Control Risks, is our guest today on Beyond Markets, and he's been breaking down ways to navigate the West African, of course, from a global perspective first, and now we're on to the West African risk landscape. Timothy, thank you for your time so far. Let's get on to Africa, West Africa to be precise now. Let's start with you walking us through those key operational risks that will be challenges for businesses, business leaders and operators in the west of the continent.
Sure. I think the two headline issues, which unfortunately haven't changed over the last year, are around security and integrity. And so when you look at the vast majority of businesses operating across West Africa, irrespective of their scale or sector, most will face issues around elements of insecurity, either impacting themselves directly or impacting their customer base or impacting their supply chains. And then also, of course, around integrity and the corruption risk. And so this is something that we're seeing a lot more focus on. In the recent years, international regulators have become far more focused and engaged on high-profile corruption and fraud cases. And only last week we were seeing headlines around one to impact businesses here in Nigeria. So a real focus on that and a real focus on making sure that the exposure that businesses have in the corruption integrity space is minimized.
Well, what about, the economies themselves? Can you break that down for us, how this directly would impact the African economies?
Well, so the good news, and it is a good news story, which we touched upon earlier, is that one of our key 5 risks, that around weak global GDP growth, is counter-cyclical. And so actually we see African economies overall, and there are some notable exceptions within there, but African economies overall are projected to post far higher growth rates than many economies around the world. And so that creates a real opportunity. It creates a real opportunity to attract foreign investment, to help businesses to develop and grow and survive, but then also as well to open up those economies to new areas of growth where technology, automation, artificial intelligence can bring real tangible benefits to those economies in terms of efficiency and productivity. So that's a really good news story. And when you look at, particularly in West Africa, some of those economies that have looking to engage on that and embrace that, Senegal, Ghana, Nigeria, although there's still obviously issues around international perception of the investment market here, that poses a real opportunity in against the backdrop of weak global growth.
Now, we're also expecting this year also the African Continental Free Trade Agreement or area to also perhaps gather some more momentum. Last year, obviously, just the groundwork being done, but this year everyone is expecting more. Are you also taking that into consideration? Could that be a bigger boost for these countries?
It absolutely could, and I think any free trade agreement is welcomed by business at large and generally leads to more efficient and more effective supply chains and connectivity with the consumer base. I think one element to caution is that we have consistently seen discussions around multilateral agreements and arrangements flounder, get hung up, take a lot longer than they should do in terms of actually agreeing the deliverables, but then the execution implementation. And so there's an awful lot that individual countries and economies and within obviously a federal system, states can do unilaterally to help make the business environment more accessible and more attractive, particularly for international investors. And I think two of those two key issues that I mentioned earlier around insecurity and around the reputational and integrity risks associated with doing business here. We have seen some countries make really positive strides in the right direction, but there remains a lot of work to be done on both of those issues, and that's something that countries and states can address and help businesses to grow and develop without requiring a wider multilateral agreement.
Okay. Now, if there's one event that's going to keep everybody's eyes glued, perhaps with TVs this year, is elections in a number of African countries, but of course we'll be focusing on West Africa. 5 of them are in West Africa, and 2 names that jump out for me is Niger and Chad, and also Cote d'Ivoire, Ivory Coast. For you or for investors who will be closely watching elections in these regions, especially Niger and Chad, where we know that, of course, the Sahel region, we know about the insurgency, and we know that ISIS West Africa also, I mean, talking about no election in Nigeria, but it's still an issue for Nigeria. But in those areas, those border insurgency, how do businesses feel in terms of how those countries can manage an election at the same time manage the security risks that could, become even more, could become higher just because of those elections?
Yeah, and it's a good question. It's a very difficult area. And I think what we have consistently seen across the region is where elections conflate with periods of insurrection, or where they are on the fringes or in locations where there is insurgency or militant activity taking place, they have been very difficult to administer, and quite often we've seen violence associated with them. So absolutely, it is critical, of course, that we maintain sort of a view on this and continue to horizon scan and make sure that we're aware of what's happening and how that's progressing and developing. Ultimately, around elections, quite often businesses have to take a backward step. They have to sit in reactive and readiness mode, and so we spend a lot of our time advising companies around ensuring that they're sufficiently prepared, ensuring that they've got the right strategies in place, that if the situation were to significantly deteriorate from a security perspective or a political perspective, that they're able to respond and react accordingly. And on the flip side, of course, when we've had election cycles that have passed by, which have passed relatively peacefully, and it's been a far more positive experience than people are anticipating, to be positioned to be able to take advantage of that and to settle into a new election cycle and start to engage and grow the businesses as well. So there's 2 sides to every coin, but it is undoubtedly always a challenge, particularly in those conflict-affected areas.
Now, for a country like Ivory Coast and Ghana, especially, let's quickly talk about Ghana, perceived to be, has had a history of conducting relatively peaceful elections and coming out on the other side. And of course, that's strict adherence to the rules of the game on both sides. Yeah, we do see some skirmishes on sometimes, but Ghana is probably seen as that one country when it comes to democracy, preserving democracy, and having peaceful elections. They usually score high. So for those investors, I mean, we're talking to those, advising those clients over there, what do you tell them? Do you say, okay, based on history, we know Ghana, usually is sort of, more peaceful? Is that what you tell them?
Well, certainly we can use the historical precedent as a guide, but of course situation changes very quickly, not just here in West Africa, but globally, and elections are fraught periods where there is quite a lot of focus on the behaviours of politicians. There's a heightened sense of tension around civil society and how it engages and interacts. And so the propensity for things to take a left turn or to go wrong is always there. So certainly we would urge caution, irrespective of how peaceful previous elections had been. And we would urge that businesses adopt a state of readiness and preparedness in order to be able to deal with the various scenarios that might materialise. And so the way we typically look at it is in terms of our sort of most likely second case and outlier scenario, and planning around those from a business, from an operational, and from a security perspective to understand exactly what businesses should be doing in each case should it materialise. But the other one I would point to as well, off cycle this year, Senegal, of course, has also has gone through a successful election process. a relatively business-friendly environment, really standing out alongside Ghana as being one of those stars of West Africa in terms of attracting foreign inbound investment. And so a really good example there of how that can be managed.
Now for Côte d'Ivoire, Ivory Coast, I mean, this is one country that's had very high in terms of GDP growth on the continent, perhaps even in the world. And now we're seeing this country also in the spotlight again with election, and of course talk about the president trying to tinker, as it were, with the constitution ahead of the elections. How do investors or how do businesses feel about that in terms of what this could translate to, and to what extent that could pose a threat to stability post the election and perhaps those developments around the constitution?
Yeah, I think there's a definite sense of foreboding around the forthcoming election in Côte d'Ivoire. It is a country that has struggled with election cycles historically, and we've seen quite a lot of election-related violence. We've seen issues around succession and adherence to the constitution. So that is certainly something that when businesses are looking at their growth and expansion plans for the next year, they're factoring in and they're looking at very hard. I would like to remain optimistic, and I would like to think that Côte d'Ivoire can run through this election cycle with as little disruption as possible to the economy. It certainly needs that. That's the best thing for the country. But it is a very fraught political situation, and there is palpable tension around this and how this is going to run through. If you look at the responses from a business perspective to how this is managed historically, there is certainly a sense of sort of having to pull up the drawbridge and sort of shut down operations and keep everything on ice for a period until that political turmoil settles down and stops simmering. And so I think the majority of certainly international businesses operating in Côte d'Ivoire will be adopting a similar approach to that, and certainly have that as part of their contingency planning.
Now, for a region like West Africa, you obviously one of the biggest, if not the biggest, threat is the insurgency, insecurity issues. Now, for businesses who have been here for a while, who've had to, do business alongside, always keeping in mind that, look, this threat is there and is constant, but have somehow managed to do business. And you are consulting and speaking to them. Would you say that now, perhaps more than, to what extent would you say they now, nobody ever gets very comfortable with that kind of threat when you have a business, but would you say that they've come to terms with it in a way, being able to just do business, but keep it front mind, if you will, but in a manner that's still comfortable enough for them to still do business comfortably, for lack of a better term?
Yeah, no, I think
I'm just trying to get into the heads of these businesses who that they have all these investments, but there's this threat that's just constant. It's just there every day.
I think there's certainly an element of a sort of war weariness or media fatigue, in particular around some of the security issues and challenges that we face in this part of the world. When you look at the scale of the violence and the human impact that that's having, not just here in Nigeria in the northeast, but if you look at Burkina Faso, Mali, parts of Niger, these are very real human tragedies that are taking place every single day. And there is a degree of, okay, but that's been going on for a long time now, so this has become business as usual. I think there's a couple of sort of caveats to that, though, which are really important. So firstly, the area that's been worst afflicted by the Sahelian militancy is an area of relatively low population and relatively sparse population density. And so it hasn't had the impact there on sort of large economic centres that it might have if it had been located elsewhere in the region. Indeed, that's likely to be one of the drivers behind it, that the inability to access jobs and to have opportunities to make money. But secondly as well, I think it never stops being an issue. And I think while it may sort of drop off the TV screens and it may sort of start to slide to the back pages of the newspaper, it still is at the forefront of everyone's minds. And as supply chains and human capital connectivity become more and more complicated and more intertwined, it can never be forgotten.
Thank you so much. Very insightful. Thank you for your time on the show today. Timothy Cox, partner at Control Risks. That's it on Beyond Markets. Thank you so much for being a part of it. Remember, you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of the show on our website. That's cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets, and you can also follow my Twitter handle too. It's at Esther Awoniyi. For myself and the team, it's bye for now.